company I'm going to talk about is it has a combination of what I look for in a special situation, which is like also an attractive fundamental long. And then you've got the optionality from the kind of event angle, right? What's happening is a big inflection in earnings. And at the same time, the company's pretty much trading at its lowest valuation ever. A couple of years ago, the parent tried to acquire the minority shares at a premium to today's price. And there's some stuff going on in the background that suggests that a renewed bid is coming.
There's a lot of fear about investing in China lately, and for good reason. With Trump going to war via tariffs and possible Taiwan invasion on the horizon, passing on the country altogether seems prudent. But with fear always comes opportunity. Today I'm talking to Dylan Marrello, who's highlighting a very interesting special situation in Hong Kong. It's a strong company with a moat, and there's strong evidence that a bid for the company by its US parent is imminent. But before we get to the details, take a moment right now to subscribe, because you'll receive weekly special situation and event-driven investment ideas that will make your investing a lot easier. And now, Dylan Marrello. What opportunity have you found for us?
All right, so the company I'm going to talk about it's called IMAX China, and it's a subsidiary, controlled subsidiary of IMAX Corporation. Just very high level. Thesis is it has a combination of what I look for in a special situation, which is like also an attractive fundamental long, right? So something I'd be willing to own on its own, and then you've got the optionality from the kind of event angle, right? And so what's happening with IMAX, and particularly at the Chinese subsidiary level, is a big inflection in earnings. And at the same time, the company's pretty much trading at its lowest valuation ever. We can kind of get into why that is. And then from the sort of event side, a couple of years ago, the parent tried to acquire the minority shares at a premium to today's price. Shareholders voted that down, and there's some stuff going on in the background that sort of suggests that a renewed bid is probably coming, which I think could probably come in at maybe a 40 to 50% premium to today's share price.
Hey, editing Evan here. If you like these sort of setups, Dylan actually spotted an entire US-based industry that's now primed for mergers thanks to deregulation. And I had the chance to discuss one of the companies he's most excited about in the space. If you want access to that restricted video, simply share this current interview on social media and send an email to support@eventdrivendaily.com that includes a link to your social share and mention that you want access to Dylan's second stock. And we'll get that video out to you right away. Interesting. So tell us a little bit more about IMAX China. I'm aware of IMAX. I've been to IMAX as a kid. Those movies are pretty spectacular. And I didn't know that they were operating in China. Tell us a little bit about the company.
Yeah, so it's like interesting. China's actually, at the moment, its biggest jurisdiction, right? So I think I have it in the write-up that I was working on. It's somewhere around 45% of the screen count globally is in China. And it's basically their growth market, right? And so I think kind of, the interesting place to sort of start here is, a lot of people are familiar with the IMAX experience. If you've gone to a movie in the last 20, 30 years, you've probably heard of it. As we sort of, this is kind of hot technology in the early 2000s, probably got a little bit overvalued, and their business model, and I'm talking about the parent right now, but the business model is the same. But the business model at the time, was to basically charge for the installation of units, systems, right? So they would sell the theatrical system, and so that was sort of like a lump sum payment. And so they're very heavily reliant on unit growth. Now, the other part of the business, which is still part of it today, is they charge a royalty, for remastering the films from the studios.
Mhm.
So basically, we got a royalty from the studio, and then a lump sum per unit installation. Right? What ended up happening was that that sort of business is tied to the balance sheet of the exhibitors. So you kind of get into the mid-teens, and then the sort of streaming wars start, and there's fear about what's going on with the box office, and so it starts to slow down.
Mhm.
And I think you kind of look at the stock chart of IMAX Corp, the parent, so it peaks in the mid-teens. And so you get a little bit of multiple compression, things are slowing down, and then of course COVID happens, right? Which is just kind of like the
Right.
nail in the coffin for the box office, and sort of everyone thinking like movies are dead, right? Nobody's going to go back to the movies. And so what's really interesting is that, and this is how I sort of got into the position in the first place, right? Was I actually started looking at the exhibitors. And I was sort of thinking through the film industry. What I sort of realized was that these ideas of like the box office being dead actually are as old as the history of film exhibition itself. Like you kind of go through like the last 100 years from the 1920s, there's always been something. So the first thing was like the TV was going to kill the box office.
Mm.
All right, then it was in the 80s, there was this big fear around the VCR. And then streaming comes. And what you sort of notice is that this whole industry operates in cycles. And that cycle is kind of driven, it's like a capital cycle thing with the exhibitors naturally, but also like a content cycle. Like the quality of films kind of goes in a circle over time, right? So in the 80s, when you had the VCRs, you started to get all these like action movies, right? Really like disposable kind of like Arnold Schwarzenegger movies. They're like made for VCR, right? And so
Right.
you saw like box office decline at the time. And then it started to pick up again in the 90s, right? You sort of notice these cycles. And one of the things that's always been part of that is like the technological change. So what we've sort of seen now coming out of COVID is that there's this really interesting dynamic, which is that, um, you know, in fact, streaming hasn't killed movie theaters, but it's actually made the studios and the streamers, who have in many respects become the studios, right? Like Apple and Netflix kind of making their own content now. They've sort of recognized like we need theatrical windows to market the film and earn a sufficient return, right? And so like there's been kind of this incentive for the studios to start going back and making big blockbusters in the theaters, right? Thing is that the consumer doesn't want to go to an old movie theater. They need a special experience. And so this is where IMAX comes in. And so what's been really interesting, what you're starting to see happen is the consumer basically demanding the film has to be released on IMAX. And in the sort of ensuing years, I remember when I was a kid, like late '90s, early 2000s, like I remember what IMAX was. It was like cool, but it's changed today. Like today, you go into these auditoriums and they're just remarkable. Like just huge screens, recliner seating. Like I do think people are kind of surprised by the experience. And so, what's interesting as a result of that, I sort of talked about how they needed unit growth at the time to sort of earn revenue. That's now switched to a joint revenue share model in many instances, right? So they're actually taking a royalty on the box office receipts from both the exhibitors and the studios, which in some respects can kind of go up to 20%.
Right.
Um, so that's a huge amount of the revenues to capture from the industry. It kind of shows you how powerful their positioning is. Um, and so as a result of this, what you're starting to see is like, despite having 1% of maybe screens globally, IMAX is starting to capture, I think, last quarter it was maybe, 4 or 5% of the actual box office receipts, right? And so that kind of brings me to the Chinese piece of this. China's kind of a growth market for cinema. And so that's why you're seeing, I think their backlog right now. So, I think IMAX has 1,700 screens or so globally. I think there's like 800 in China. 40% of their backlog is in China. I think there's like 190 screens, like new screens in the backlog. So coming in the next year or two. So that's rolling out. At the same time, you have a Chinese box office that is actually booming.
Hmm.
And that's sort of, I think, a structural thing. So you have the Chinese government, you know they're calling this year the China film consumption year, something like that. They're actually giving $130 million of subsidies to try to get people to go to the movies.
Interesting.
And yeah, so that is an interesting piece to it. So you have this kind of like tailwind from the state. You also have a local language, like Chinese film industry, that's growing, right? 'Cause historically, what happened is a very contingent on like Hollywood tentpole films.
Right.
Now you have, um, I think last year, you're basically seeing more than half of the box office is local language now. This year there was a film, kind of late, maybe end of 2024 into the new year called Niza 2. I'm definitely not saying that right, but it was. I think it's the top. I think it's the number five grossing film of all time now. It did like 2 billion at the box office. It's a huge phenomenon
Interesting.
that happened, and this sort of switch to local language cinema is a big uh, tailwind for IMAX as well.
Right.
And the reason for that is they're able to take a bigger share from Chinese films because the Chinese government basically there's basically like tariffs on like the film. So basically like Hollywood studio receipts for films in China are lower than they would be for home, and therefore IMAX's share of Hollywood films in China are lower because the
Hmm.
box office receipts are lower, right? So there's a kind of step up in what they can earn for each film when it's a local language film. So that's kind of helped propel the earnings. So you basically have like, you have a 20, I think China's box office is up 25% year over year,
Right.
but IMAX's box office in China is up over 100%. So you have a growing underlying market, then you have market share capture, and basically the IMAX film format is just taking more and more of the share. And
You said
there's,
that they had. Sorry, what's
yeah,
what's their current install base in China?
I want to say it's like 700 and it's like just shy of 800, 790 or something.
Okay,
Yeah.
so 800, and they're basically growing that by 200 over what period of time?
Yeah, it should be in the next. I don't know what constitutes backlog. I gotta think it's like 12 months to 24. So yeah, so that's good.
Is this so? You said over 12 to 24 months, roughly. Just as a
Hmm.
guess, is this going to be a
Yeah.
recurring theme where they're constantly growing the install base by about 200 units? Or this episode is brought to you by Event Driven Daily. If you're spending too much time trying to uncover special situation stocks, make sure to look at Event Driven Daily's Morning Brew newsletter. Each month, we scour the internet to find as many special situation opportunities as possible, and then send each and every special situation to free subscribers in a neatly packaged email. This service is absolutely free and will save you hours each month trying to source special situation ideas. Go to www.eventdrivendaily.com and look for the subscribe button at the top of the page. That's www.eventdrivendaily.com.
Yeah. So, they say basically, and I kind of have to take their word for it, right? But they sort of say like the total addressable, like, the full penetration is about 1,400 units, right? So 800 now, gonna tack on another, I want to say 850 to 200 from the current backlog. So that gets you maybe like 400 more units over time, right? But then remember, like
Okay.
a huge part to the growth story now doesn't rely on selling the units, right? Because they're basically done in a way like the sort of financing for the exhibitor is like a smaller upfront payment, and then IMAX takes a royalty instead of a lump sum upfront, right? So they're less sensitive to the unit growth. The reason the unit growth is important, obviously, is because you're just going to get more royalties up of more units, right?
Right.
Um, but they're less sensitive from like a P&L standpoint, so building out those boxes. So I think that's an important thing to consider, right? Like you get to full penetration on these, all that matters is that they can sell seeds, right? And so that's kind of why I focus on those tailwinds. I just say one more thing on that point is like there's sort of a new element to this, which is actually called film for IMAX. So what's happening now is you're starting to see filmmakers, Christopher Nolan, they're shooting their films right on IMAX cameras. That's an additional revenue source, right? They basically have an increased take rate from film for IMAX. Just saw today, I think, Dune 3 is being shot entirely on IMAX, right? So there's this sort of like, I'm seeing this shift in the industry where everything is going IMAX. because it's what sells tickets, right? I think in China is really interesting. The F1 movie has been a huge hit. Um, and I think in the opening weekend in China, IMAX box office was over a third of the total box office, right? And
Mhm.
that's on 1% of the screens in the country, right? So that is a huge amount of value being captured by like a relatively small company, right? Like, IMAX Corp is maybe, one and a half billion US enterprise value. The subsidiary, it's sitting right now. They don't report quarterly, so you have to kind of guess what the cash is going to be. But the IMAX China level subsidiary, probably a $250 million enterprise value today, right? So that's a pretty small entity that's capturing so much of the value.
So you have a situation where this company obviously has a moat, it's a high quality business,
Hmm.
probably earns good returns on capital. We haven't talked about that yet, but
Yeah.
I assume that would be the case. It's switched to a more advantageous business model.
Hmm.
You're going to see growth of about 400 units in China. And then, add to that, the Chinese middle class is growing quite
Hmm.
substantially.
Yep.
So, that just adds another growth tailwind.
Right.
And then on top of that, you have a possible buyout by the
Yeah.
parent in the US,
Yeah.
right?
That's
So
right.
what's a subsidiary worth right now?
Yeah. So just say one thing before I answer that, because you mentioned the mode, and I think this is kind of an important thing to sort of talk about because I think it gets missed, right? That, a lot of people often talk about like the four modes. I think it's like Peter Thiel's thing, right? Like you get network effects, proprietary technology, high switching costs, and brand. And I would argue that IMAX actually has all four of those, and increasingly a brand. They definitely have proprietary technology. Switching costs, like for the exhibitors, are very high, right? Because if the studios are now shooting films in IMAX, you can't just like go use a competitor's format. And then obviously, there's sort of a network effect based on what I just said, where it's like, hey, well, all these theaters have the IMAX screens, therefore it's beneficial to the studios to use those. It kind of creates this like ecosystem. So I would just say that first. And sort of like on the valuation front, this is super interesting because, um, I'm talking about all this growth, right? Like their at the IMAX China level, net income in Q1 of this year grew 172%. So
Wow.
rapid growth. Now, obviously, this is not the kind of situation where you can just annualize that, right? Because like I said, there was that Niza 2 film, which is like the biggest movie ever. Um, so that obviously contributed, but you had 100% revenue growth, 80% revenue growth, 172% income growth. So you have big operating leverage. Um, that was that income that they earned was $20 million in Q1. The market cap today is about I want to say it's $8.20 a share. I think it's about 320 million, maybe a bit more than that, 350, 360 million. But they will have as of Q1, or sorry, as of the end of 2024, they had about 80 mil of cash and no debt. That 20 mil is a pretty cash generative business. Actually, the free cash flow probably higher than the net income. So that 80 mil is probably over 100 million now. So I'm kind of at $250 million enterprise value, and I would be pretty comfortable saying, and, actually since my write up, I think maybe a week or two ago, there's been some more data out because Jurassic Park, the new Jurassic Park movie's out. Um, and interestingly, China is the only jurisdiction that has Jurassic Park in IMAX.
Interesting.
Yeah, and that sort of shows you the importance of IMAX there, right? Because the reason it didn't happen in North America was because F1 had all the IMAX screens, and then it switches off to Superman like next week. And so Jurassic Park didn't get an IMAX window. I
Mm.
guess there's like a large enough screen count there that Jurassic Park got an IMAX release. And so that you've sort of seen it's been a huge hit, which I think everyone's kind of surprised by. So that number's
It's
that.
also interesting that, a movie company can record a
Mhm.
movie in two different formats. So you wouldn't think that's possible, right?
Yeah, because what's happened, this is why IMAX gets to take the share from the studios is they're just remastering things. So
Mm,
it's interesting. I saw last week that this is a limited release. It's not playing everywhere, but there's like a Jaws in IMAX, right? So they're remastering like 50-year-old movies in IMAX now. So that's a really interesting piece to this, right? Because it's not just um, the viewing equipment, right? It's not just like the auditorium, but it's actually like the technology to remaster the films. That's really the key.
right.
So you can do that to whatever film, right? Not very few of the films are being shot in IMAX cameras,
Mm,
but you can remaster them into IMAX, right? So that's why that happens.
okay.
But yeah, so on the valuation part of this, like, I think they did 20 mil in Q1. I'd be pretty comfortable at this point saying that they'll do 40 million conservatively um, in 2025. That's net income. And I kind of back the cash out because you sort of mentioned high return on capital business. This is a pretty like asset light business, right? Because they're basically like licensing the technology from the parent in North America.
Mm,
This is, I mean, very high return on capital at scale, right? So not using a lot of the cash, I kind of just back that all out of the equation. So I sort of think like, at this point today on a forward basis, IMAX China is probably trading at less than 7 times earnings, excluding the cash.
right.
And maybe it's even 5 or 6. And that's the lowest. I said this at the beginning, right? But like that's probably the lowest valuation it's ever been. And this is where the story gets really interesting, right? Because not only do you have this like really exciting like fundamental growth story with like this kind of emerging moat, but if you look at the stock chart, right, like predating COVID, it was a much, much higher share price. I don't have it in front of me, but it's maybe 17, $18 a share. And it's just even when the world shut for COVID,
Hmm.
maybe it's then it was 17, right? Like it was much higher in 2022, then it kind of starts to slow down. Uh, for much of its history, it probably traded at like a high teens price to earnings ratio. Now you're at like 6.
Right.
So on a historical basis, it's really cheap. I think on an absolute basis, it's no doubt cheap based on sort of the qualitative attributes I was discussing. But then where it's like really eye popping is that the parent, is probably trading like 22, 23 times forward EPS, right? So you're like 6 times at the sub, 22 at the parent. That's a huge gap. And that kind of gets us, I think, to like why this gets really interesting from like an event driven angle, right? But
So if you look at the Hong Kong market, basically the
mm-hmm,
entire market is, dirt
yeah,
cheap. So I
yeah.
think that kind of explains why the multiple is so low today.
Mhm.
Would you agree with that, or?
I would say that's part of the reason. Definitely. Look, I think that's one for sure. I'll give you a few reasons. Number two is that despite this kind of resurgence in the box office that I've been talking about, and that's globally, it's particularly strong in China, but it's globally, is that the narrative that the box office is dead hasn't left the market. It's still the prevailing
Mm,
mood, right? So if you look even at like, I own a few different stocks in the sector, and like you even look at something like Cineplex in Canada, Marcus in the US, even Cinemark. Cinemark's done better than its peers, but they're all, I mean, I was looking at Marcus today, which is a small operator in America. I think it's down 22% year to date, despite the box office being up like 30% year over year. And these businesses have huge operating leverage, so that's a meaningful difference. But it's just like there's a sort of you don't want to see it, you won't believe it till you see it kind of thing going on, right? So I really do think you need to start seeing this in the numbers. So we're still a little early, and um, IMAX China doesn't report quarterly, so
right.
the only reason I know what the revenue and income is because you can kind of extract that from IMAX Corp's Q1 report. But beyond that, we don't really know the details. Like I can't tell you like anything. I don't know what their margins were. You kind of have to piece everything together. So they haven't reported. That's the second thing. and this is the third thing, that kind of brings us into the sort of event-driven part of this. But in 2023, IMAX Corp makes a bid to acquire the minority interest. So I should say IMAX owns about 72% of IMAX China. So they make a bid for all the shares they don't own at $10 a share. Hong Kong securities are a little tricky at getting these things to go through because I think if you have 10% of your shareholders dissent, the bid's killed. And so the bid failed. They basically argued, hey, this is too cheap. And they were probably right. They were like, look, we're trading 15 times earnings and now you're bidding much lower than that. Opportunistic. So the bid failed. But what happened, and this will get to maybe some corporate governance stuff, but like once the bid failed, IMAX Corp killed the dividend at IMAX China. So it's sort of left the security a little bit orphaned because this used to be a dividend paying stock. And now I think, hey, it's China, it's movies, and now you got this controlling shareholder who like yanked the dividend because they didn't get their way. It killed the stock. And,
Right.
it's kind of been drifting in like limbo ever since, right? Like it hasn't really responded to anything. It's just been kind of, it's been drifting at $7 to $8 a share for a couple of years now. Doesn't really matter what the fundamentals are. People are just kind of like, how do you get paid here, right? And so we can talk. That's kind of like the pessimistic way of looking at this. I think things are changing. I'm sure we'll get there, but like, I think those are sort of the three reasons.
Mm,
Um, but based on the event angle that we'll get into, I'm not so worried about this being like value trappy.
right. Especially with the growth. So it's probably worth talking about that a little bit now.
Hmm.
So you have a parent company owns 72% of
Yeah.
the subsidiary.
Hmm.
Obviously the subsidiary is going to do extremely well going forward. It'd be nice if the parent could capture that. The parent is trading at, I think you said, a 22x multiple
Yeah,
compared
it's
to,
more than 20 times. Yeah.
yeah, compared to about 5 to 7 for the
Yeah.
subsidiary. So if they could add those earnings, well, I guess those earnings would already be on the books, right?
Yeah. So the way so the accounting for it right now is that like it's consolidated. So what you'll see is like all the earnings, but then there'll be a non-controlling interest, which is the minority shareholders in China and the Chinese sub,
Right,
right? So someone like me, right? So like
right.
basically, let's say, I don't have the numbers in front of me right now, but it's like I think basically what I got to was like, yeah, and this math checks out in my head. So if they do $40 million of net income this year, something like 12 million of that doesn't belong to IMAX. It belongs to the minority shareholders,
Right.
right? Call it 28% or something, right? And so the benefit to IMAX is say, I kind of laid this math out, but it's like it's pretty like it's what I would describe as a no-brainer, right? Because
Hmm.
this is your most important jurisdiction, first of all. It's your growth jurisdiction. It's gonna have your most screens. A little more than a quarter of its earnings are not being, upstream to the parent.
Right.
Okay, so you have, let's call it 12 million, 20 times earnings, right? That's worth $240 million to
Hmm.
IMAX incrementally that they don't have today, right?
Versus about 60 for the subsidiary, right?
That's right. So yeah, so I guess the way so exactly. So this is, the kind of the way you think about it is like roughly 96 million shares are not owned by IMAX. Figure out what price they want to pay. I say, look, like I think I said, in the write up, they could pay $120 million. Maybe it's roughly $12 a share, right? We're at 850 today, a little less than that,
Hmm.
maybe 40+% upside. They could pay $120 million. That's 10 times earnings. You buy that $12 million. That $12 million on day one is worth over 240 million to IMAX, right? So you're just basically doubling your You're doubling the value of that profit stream just on multiple arbitrage. And you're doing so, this is a kind of a big deal. It's a $1.5 billion company, the parent.
Yeah.
So to add that value is significant, right? It's like a mid-teens return on day one. And by paying $12, they're only valuing the sub at 10 times, right? It's valued at 6 or 7. So the minorities, I think 12 probably gets a deal done for the minorities.
Yeah.
And it makes the parent happy, right? Because immediately you clean up the story. Even if you're a North American shareholder of IMAX, I mean, you could be based wherever, but like if you're a shareholder of IMAX, you just get rid of that like unnecessary non-controlling interest, and boom, you've got this big upside. But they're also taking in the incremental cash on the balance sheet that isn't there. So if we assume IMAX China has $100 million of cash, 20 million or something is not IMAX's. It's the non-controlling interest.
Right.
Now they get that cash too. So it makes a lot of sense, just from like a financial engineering point of view. It also cleans up the story a lot.
So I guess that's, the incentive for getting this deal done. When
Hmm.
do you anticipate another
Yeah,
bid coming through for the company?
right. So there's an additional piece to this that's really interesting that kind of skipped over, right? And the reason why I sort of started thinking, hey, like they're maybe thinking about doing this again, and that's because IMAX China has started buying back shares, right? And so this is
Mm,
this is where it gets extra interesting, right? Because look, I don't like situations where you're just praying for a buyout, right? Like you could do that with any company, and then you just sort of sitting there forever owning this thing, and like it's a psychological warfare too, because you're like, the day I sell this, there's going to be a takeout offer, right, or something like that, right? So
right.
I don't usually like betting on just a buyout in and of itself. Now, obviously, there's always some kind of evidence, but in this situation, you have the fundamental story, but now you have this buyback. And the buyback is a really fascinating piece of it, right? Because remember, they cut that dividend, so they stopped the capital returns, 2 years. Um, and what happened basically was like, if you remember in April during like the Liberation Day, like tariff nonsense, like you had I think, China has, one of the things China threw out was like, hey, we're going to like tariff all US movies. And so the market's like, okay, shit, like, first of all, it's China in a tariff war. And now they're saying like, hey, you can't have US films here. That's going to hurt the earnings stream. So IMAX China sells off pretty aggressively. Um, and then, maybe a month goes by, it ticks up a little bit, and it gets to about 650 a share. And then all of a sudden, because you can see this from the way the disclosures work, every day you're getting a new filing, buyback, buyback, buyback. So the subsidiary is buying back shares every day. Now, obviously, the parent's the one directing that because they control the subsidiary.
Right.
There is basically like you can't even really tell the difference between they have their IMAX China has its own CEO, but it's like the chairman of the board is the same person running IMAX Corp, right?
Right.
And they're buying back stock every day. And so, first of all, that's interesting in and of itself because it's accretive. You're returning capital like at 650, it's like 5 times earnings on this like really good business. Um, but then you kind of start thinking about like the rationale, right? So if you are the parent and you say, okay, well, we tried to buy out the minorities for $10 a share 2 years ago. They said no because it was too low. We're not going to be able to buy the minorities out for less than 10. But what if we can buy some of them out with the cash on IMAX China's balance sheet below 10, right? So basically, what you're doing is you're just buying out minorities who, for some reason, are selling now at this value, right? So I think the sort of game theory of it is like let's buy as many minorities out as we can below 10 because we know we have to pay more, right? So we're doing a service to our shareholders because you know when we have to go make that bid down the road, there's less shares for us to buy. right?
Less money to hand over.
Exactly. And, uh, so that's kind of the signal where I'm like, okay, you have this buyback. It's creating per share value because it's like the stock is really cheap. It is strategic because you're taking out minorities. And it's also a thinly traded stock, right? Because 72% owned by the parent, right? So your float on this, I think I said 96 million shares. A lot of people do not have any interest in selling at these prices. And so what happened is, as this buyback's going, the stock went from 650 to 850 in a straight line in like 30 days, right? So they basically drove the stock price up. Now, uh, I think this adds what's even a more interesting feature to this is I think you just now have a floor on the share price. I think it's very hard to lose money now, right? Because you know that there's a buy, you know that the company's a buyer of its own stock, thinly traded. It's going to serve as a floor, right? Like they've stopped buying back stock, and that could be for whatever reason, right? You never really know. Maybe there's like a blackout or something's going on, or maybe they're just like, hey, we'll pause. But I suspect if we, you know, $8.20 a share today, I think if we go into the sevens again, like you're just gonna get more buybacks, right? You'll get taken right back up. So you
Right.
have this really interesting asymmetry where it's like you have fundamental, um, you have like sort of like fundamental downside protection because you're buying this for really cheap already, no debt, a lot of cash. Then you have the support from the buyback, and so those two things alone, yeah, this company is generating so much cash and trading at such a high yield that even if there weren't this sort of like takeout angle, it would be very attractive because I think you'd get paid, right? Because it doesn't have the sort of value trap dynamics, right? It's like super cash generative and growing and returning capital. How do you get trapped in something like that, right? Like eventually you just buy every share until it goes up, right? So
Yeah.
you've got that angle. So that sort of like was, I think, the signal, at least to me, that like, hey, I think they're going to try doing this. Now, there's a couple other things. These are more the sort of like, marginal, interesting kind of like investigative like facts, right? It's like there's no CFO at IMAX China. Uh, whatever, resigned over a year ago, maybe even longer. That's kind of weird, right? Like you don't have a CFO. You have like no comment around replacing the CFO. The website. Okay, so IMAX China website up into the bid being made in 2023. They had their own investor decks, press releases all the time. As soon as that stopped, they just never updated the website. So the only thing that goes on the website now are like mandated regulatory filings.
Hmm.
And that's another interesting piece to this, right? Like I think there's like no sell side research. Like maybe there's one analyst or something. Like the analysts have stopped. You're not making an effort to market the stock to any investors. You don't even have like a management team. You've got the CEO of IMAX Corp in China all the time, going to Chinese festivals, like, and now you have this massive boom in the economics in China. It was the biggest part of their revenues in Q1, right? It's just
Hmm.
so weird. So you have all these things kind of adding up, and then they start the buyback. And another thing someone mentioned to me um, a couple of weeks ago is that I think IMAX is having their investor day in 2026. Pretty nice to go to your investor day being like, hey, we have this all wrapped up now. Look, our earnings just grew by like whatever 10 million because we bought our sub, right?
Right.
So it just strikes me as the right time. And like I said, this is one of those situations where you don't need the buyout to happen because I think it works anyways. But you can kind of sort of frame the risk profile of, the sort of like return profile of this investment, right? It's like your downside sort of limited by the buybacks and the fundamentals, and then your upside is, you're probably not going to make a multi-bagger on this stock, right? But that the bid has to come in above 10, which is
Hmm.
it's a 20-25% return from today's prices. It's not going to come in at like 10-20 or 10-50 because you don't, as the parent, want to risk getting the bid shot down again after all of this, right? It's just a nightmare. Like you're cheaping out for no reason in a situation where it's like, hey, we just want to get this over with. So I think at the very least you'll see 11. I think probably 12 makes a lot of sense. That's a 45% return, with, again, like a really sort of like, low risk on the downside. Now, obviously there's always the China overhang, right? We can
Yeah.
get to that, but like in terms of like the company downside itself, leaving aside geopolitics or regulatory things, is very low. Um, and then again, 45%, I think probably happens in the next year. So it's a really good IRR if it goes according to plan. Right?
So have the insiders been buying? Because, if I'm the
Yeah.
CEO of the company, then that's exactly what I would be doing. It's going to come, and it's cheap. It's going to come, over what the stock price is going to be.
Yeah.
So just scoop up as many shares as you can.
Yeah. So not to my knowledge, but I mean, obviously they're buying the stock and the company structure, but
This episode is brought to you by NetNet Hunter, the best resource for NetNet stock investing on the internet. NetNets, or cigar butts, are sub-liquidation value stocks that produced such outstanding returns during Ben Graham's lifetime that he gave up all other strategies to focus on them. Professionals such as Warren Buffett and Joel Greenblatt also launched their career on the strategy, and that proved quite successful to say the least. Right now, you can get a free monthly NetNet stock pick from NetNet Hunter's free newsletter. Visit www.netnethunter.com and look for the link on the homepage.
insiders at IMAX, like the CEO of IMAX, owns a lot of the parent, right? So they stand to, like, the incentive there, right, is just like their interest, um, at IMAX Corp will be worth more. And, I think like Richard, you know, he's kind of the controlling mind of IMAX, right? Like I think, he probably owns 5 or 6%
Mm.
of IMAX China as well. So you got 72% plus another six. Like they're really, there's a ton of alignment here. Again, this is it's not the most liquid security, right? So I think if you kind of like, not that this is what's on their mind, but like if you've got big pockets like these guys at IMAX, like not really a needle mover. Like sometimes 100,000 shares a day, at today's exchange rate, maybe that's, whatever, roughly, maybe 80 to 120,000 US dollars worth of stock are trading a day on this thing, right? Obviously, that would also, if insiders started buying 1970 shares, that would actually be kind of concerning because then you would think it's not in play, right? Like if they are indeed like planning a takeover, I think you'd want to see some quiet from the insider behavior, right? Because they kind of know what's going on. So I don't read much into that. They're already super aligned. Um,
So
and
why would that
yeah.
be true about the CEO in China? Because, if IMAX
Oh,
China,
well, yeah. So the CEO in China could be doing it, right? And
right?
I just never think much about the CEO in China, like not to like I don't mean like disrespect or anything, but it's just like it's almost like like this is just a fictional structure almost. There was a interview I was watching of IMAX Corp CEO at like the Chinese Film Festival a couple weeks ago. Just like talking about how excited he is about the company and stuff. Like he writes the annual letters. Uh, right? It almost feels like it's just a legal fiction. This company, right? Again, there's no CFO.
He writes the
So
annual letters for IMAX
for
China.
IMAX China, yeah, he's there's like
Interesting.
a chairman's letter. I mean, it's a chairman, right? So it's not
Right, right.
unusual, but like it's yeah, I just don't. I mean, I don't think much about what's going on at like the subsidiaries management level.
So you mentioned
So I don't read much into that.
Right, right. You mentioned China and risks that have to do with China.
Yeah.
Obviously, longtime investors know that there are serious risks of dealing in China. And, what do you see as possible risks on the horizon just by,
Yeah.
the jurisdiction?
Yeah. Yeah, for sure. Well, I mean, you kind of get at it right away, right? Like there's like the China risk, right? So we saw one in April, which is like Hollywood movies being banned. Kind of go through all these risks and say like, what's the mitigating factor, right? So that's risk. But then you're like, okay, well, they said they were going to do that, and every single Hollywood movie that was supposed to come out in China this year has come out. But also, importantly, is that mix shift towards local language films. So you're becoming less and less reliant on Hollywood in China. So that helps. And there's sort of like the the more overarching like regime risk, which is just like the appropriation of property, right? Like nationalization
Right.
of property. And that's like, I don't have a great answer to that. Like when you're investing in regions like this, it's just kind of always a risk. Now, what I will say is a couple things, which is like, one, the Chinese consumer really likes IMAX. It's like an important thing. It's a very popular brand in the country. It doesn't insulate you entirely from risk, but that helps. The technology is proprietary, right? And you kind of have, so there's the biggest exhibitor in China is called Wanda, and they have so many of these installed IMAX theaters, right? The other proprietary technology to remaster the films, you're really like impacting like this infrastructure, right? Like you're gonna have to find some other technology to use. So it's a kind of important technology. Again, it's cinema. It's not like mission critical like military parts. So like there's always risk that they're just like screw this, we don't need it. So
Hmm.
that's one thing. And then the other thing that I say, a lot of times one of the risks with investing, a place like China is that the company is controlled in some way by like Chinese entities or like even like Chinese persons who have, whatever. You almost feel like you're totally investing in like a foreign entity. With this business, it's very much a North American business with a controlled subsidiary there. And so, again, while this doesn't like insulate you entirely, you have a controlling shareholder who has every interest in protecting their interests in China, right? So you don't need to worry about like, hey, the controlling shareholder is going to go like rogue and just steal the company from us, right? Like that's their most important jurisdiction. This is a $1.5 billion U.S. company's most important jurisdictions, like business interests. They're going to fight for you to make sure that that's protected, right? So
Right.
all those risks exist, but I think they're just like, yeah, they're somewhat mitigated, right? Yeah. Huh.
Right. And we're talking about a narrow time frame here. So, you said 2026 was the investors day.
Hmm.
Let's assume that it happens in July. So we're looking at, about a year.
Hmm.
So the time frame that you would be in this would be roughly a year. And
That's
then,
right.
just betting on anything bad happening to the company within a year, the odds are pretty low. I mean, they're there,
That's
but they're
right.
pretty low.
Yeah.
I know
This
a
is
lot
not
of
like a
people are
forever
talking about,
hold, right? Yeah. So good.
right. I know a lot of people are talking about China invading Taiwan and
Hmm.
what the potential implications would be there. And the year 2027 has been batted around.
Yeah.
But yeah, I mean, so you are taking a bit of a risk.
You are.
When
You are.
When Russia invaded Ukraine, then you saw a lot of those securities locked down. You couldn't buy and sell Russian securities. So
Hmm.
potentially that could happen here as well.
100%.
But within a year, I don't know. I
Yeah.
think the odds are kind of low
I
on
would also
that.
sort of say, and I always like caution myself in getting too sort of like excited about the story, right? But it's sort of hard for me to think of a risk other than that in this setup,
Mm,
right? Because you have a clear discount to fair value with capital being returned. And so, like, does the upside materialize necessarily? No, you never know that, right? But am I going to get meaningfully impaired by buying this at $8? No, unless something happens politically, geopolitically, right? Like, so that is your risk.
right.
Now the question always becomes like, is it priced accordingly? right? I think if those risks didn't exist, this stock would be already 50 to 100% higher, right? Like it is
Yeah,
manifestly too cheap, right? I mean, again, 6 times earnings versus over 20, right?
right.
That's it's multiples of upside just to be valued at the same valuation as the parent, which does the exact same business. Like it's the same.
Yeah, you're getting paid to take that risk, basically.
I think so. Yeah, I think so. And another thing I would say here is like, let's say um, that a bid doesn't come, but like they're buying back stock, right? Or even not buying back stock. But let's say the stock just, I wake up tomorrow and it's $11 a share. I'm probably exiting, right? Like this is not something I'm playing for like this like long-term hold multi-bagger, but it's sort of this like, again, I think it's this kind of like really exciting risk adjusted IRR, like asymmetric story where it's like you have a very good chance of 50% in 12 months and very little chance of losing any money.
Yeah,
So that's kind of how I see it.
absolutely. And I think that you can probably trust the numbers here because it's attached to a
Exactly.
large US organization. That's not
It's
always the
all, yeah,
case with, other Chinese or Hong Kong businesses, right?
yeah,
You always have some doubts about the numbers, but
100%. It's
right.
consolidated on IMAX Corp's financials, right? So unless they're
Yeah.
cooking the books, the numbers are real.
Thanks a lot for being here today. If people want to learn more about you and follow your work, where should they go?
Yeah, so just, find me on Twitter. It's Raging Bull Cap. Yeah, and then I write a Substack, and you can find the link in the bio on my Twitter, but it's Raging Bull Investments.